So Tesla and Meta have both come out with their earnings over the last couple days. It's Thursday, April 25th. We're almost to the weekend, which in my life, I don't know if there is a weekend. It just bleeds together. But that aside, Tesla came out and reported earnings, and they've been on a downhill slide for quite a while. And when they reported, they missed. They announced, things weren't going as great. But of course, Elon, the ultimate salesperson, gave a speech, and I haven't listened to it yet, but according to Kerry, it was pretty magnificent of what the future would look like. He's an incredible storyteller. He said that, they're going to come out with a cheaper version of the Tesla, but he's been saying that for a while. So I discounted that idea. They're having problems. They introduced the Cybertruck, and now those things have sticky pedals, and they're having to recall, I think, over 3,800 of them to fix them. This is the story of Tesla. They rush a product to market, they recall it, they fix it, they get sued, this, that, and the other. But Elon leads you to believe the future's right around the corner. Well, the reality is, it's not. And then there's Meta. Meta is run by Mark Zuckerberg, and he's really done well for the last, a year, 2 years. Consumer has spent money. They're heavily driven by consumer spending, as well as Tesla is. That's the one thing we need to take into account. The consumer is the one who propels these companies' cash flow. If the consumer is strong, like we saw from 2020 to 23, then they do well. Meta does well, Tesla has done well. But Tesla started warning a number of quarters ago that this consumer was getting tight and that they weren't spending money on cars. And Tesla stock started to move south. Well, Mark came out last night and said something similar. They're spending money to introduce, AI into the portfolio of Facebook, and they're typically during those periods of time, they spend a lot of money, and that crimps their cash flow. Now, the one other thing that nobody's talking about is that the consumer is really struggling. You look at 90-day credit card delinquencies, you look at 90-day mortgage delinquencies, they're all going up rapidly. And the Fed has basically said they're not lowering their interest rates anytime soon because inflation still is a problem. Where is Meta and Tesla? Where would you consider buying them? Well, I'm going to share with you in this next segment where I would consider buying them. And I'm going to take into account not Elon's narrative and his grandiose vision of the future, but what is really happening today. And that is he sells cars to make money. He doesn't sell AI robots yet. He doesn't sell enough solar panels or energy packets to make a big difference in their cash flow. They sell cars. That's today. That's what I'm talking about. And over the next probably 24 months, 36 months, reality needs to be paid attention to. So I'm going to give you also my take on Meta and what their price target I would have for them for the long term. Take into account consumer-based company. If I'm not spending money on the products that people advertise on Facebook with, then they quit advertising, and that advertising cash flow gets crimped. So let's go. All right, so this is Tesla's chart from a monthly perspective. The 9-day or 9-period simple moving average, the 20 period moving simple average, so 20 months, the 50 simple moving average, and the 90-day or 90-period simple moving average. The 200, well, it just goes back too far when it comes to a monthly, and it doesn't show up. So when I'm looking at this, I look at that back in December of 19 on a monthly chart, Tesla broke through this area and has since up until basically until April of 22, it broke through that 9-period simple moving average, or 9 months simple moving average. It broke through it, came back, tested it back in 22, and back in August of 22, it tested it there, it failed, and then it bottomed at the 90-month simple moving average at in January 3rd of 2003. It then started making a move higher and got to a peak during that time of in July of 23 of right around price-wise, it closed out the month at $267.43. After that, it started a downhill decline, breaking the 9, breaking the 20, breaking through or 20 and the 50, and continuing on for the last 3 months. So that would be February, March, and then now April. It has come down now to the bottom of its Bollinger Band. The lower Bollinger Band has met the 90-period simple moving average here, and that is where it is bounced back after earnings and is now challenging the bottom of the month of March, where it closed out at 175.62. All right, so that's a weekly. What do you see here? I see a downward trend since the peak in November or January of 22. And since then, it has followed that negative trend line. So if I'm looking at the 20 here, that would be a good reference point. Every time comes into that 20, every time, in this area, it moves down. So could we see a move higher to the 20-period move average? Absolutely. I would not be totally shocked, but this resistance level at 175 and some change, say 176, that could be significant right now. The next level is 210. The question is Elon, alluded to, is the consumer's a bit tight. Consumer auto repossessions are going up. And so is it likely that Tesla could break through the 9, the 50, and the 20? I don't think so. I think, with where the economy is going, Tesla's got a lot of headwind ahead of it. And maybe it stays here. Maybe it stays in this range. I mean, this range was a big resistance / support level back. That started in August of 2020. So this may be where Tesla sits, but I wouldn't bet the farm on it. I do believe that the economy is getting worse. You saw that in the CPI number, which I'll bring up here in a little bit, and we'll give some commentary about that as well. So that's Tesla on a monthly basis. Let's check out a weekly. So on a weekly, more confirmation that back in the peak of November of 21, it peaked and then has made a downhill slide since then. We're more that support area that was sort of developed back in August of 2020. There's support potentially there, but your Bollinger Band, you're at the lower end of your Bollinger Band, and it still points lower. The lower band is pointing straight down, and the upper band is also pointing straight down. So when I look at the trend since November or October, actually November of 21, it still is down. It still is down. It is gravity, and gravity is pulling Tesla south. Let's take a look at a couple of the oscillators here. So this is the slow stochastics oscillator. And as you can see, it's below that 20 mark, and it's saying it's oversold, and it's starting to point a bit higher. Okay, when it breaks 50 here, then I would be considering, this is interesting. It's got some momentum going higher. That's pretty cool, but it's not breaking 50 yet. That's reality. That's where it's at. So that's cautionary to me. Look at it, the RSI. RSI is at 40.46 today. Looking at it from a weekly standpoint, once it breaks over 50, then that scores a +1 on my 10-point scoring system. But today, it's not. And all this momentum that could be happening this week could deteriorate pretty fast based on other companies' earnings that are coming out later, actually today. And then let's take a look at the MACD. This is the MACD. Now, this is a slower indicator versus the slow stochastics indicator. Slow stochastic is a leading indicator to the MACD. RSI tells you strength. So you're using those as 3-point system right there, just out of those three. And right now, it's negative. It has been saying negative, screaming negative, since October of 23. So, and that's where we saw a real big start of the downhill slide of Tesla in this case. So from that standpoint, I still have confirmation that on a monthly, on a weekly basis, that this is a downward trending stock and will continue so. So now let's look at the daily. Daily, to me, from a long-term or intermediate-term perspective, is static. It is like the static on your radio that you get. But it can be telling from a short-term or swing trading perspective, which if you're not part of the Best of US Investors Platinum channel, Mark teaches swing trading and posts a list of swing trading ideas every Monday. And Mark, I mean, reality is he's pretty phenomenal at this. He's a conservative investor, but when it comes to swing trading, he's not aggressive at all. He's very conservative and he wins. He wins at least 70% of the time. And if you look at trading and investing, 70% of the time is pretty spectacular. So Mark is fantastic. If you're not part of the Best of US Investors channel, Platinum channel, get on it, $60 a month. So I'm looking at a Tesla point of view here. We had on Tuesday, they reported earnings after the bell. Wednesday, it bumped up quite a bit, went from a close on Tuesday of $144.68, closed out on Wednesday at $162.13. So if you took the risk of buying this stock on Tuesday, you got paid back pretty well. I mean, their earnings sucked, but the market said, "Hey, we're gonna give you 2 cents," and you had a big bump on Wednesday of roughly 12%. So if you traded that, then you won. Question is, where are we going to close out today? We're up against the 9. Let's zoom in a little bit more here. We're up against the 20, which is that yellow line. And if we close above it, it's that's a score for Tesla in this point of view. But the problem is, if it doesn't close below the 20, then there wasn't enough demand versus the supply in the market from a daily perspective. So wait till the end of, let's see, at the end of the day, this video will post up at 3 o'clock. So we'll have our confirmation there. Go check out the chart after. Your MACD is starting to show positive. So that's a positive in this case, but wait till the end of close, get a daily confirmation there. This is the RSI. It is at 50.26 as I'm recording this, but it's starting to turn to one of these. Top of the bell curve, it's starting to turn over. That to me is saying there's not a lot of strength left in Tesla there. Then let's look, our stochastic is at 46.38. Above 50, you get excited. A close above 50, I get a little excited. But right now, it's just right up against it. So the question is, how will this Tesla close out the day? Will it sell off as we get in further in the day? Well, leave your comments below and let me know. I'll know, but I'd be curious to what you have to say below. All right, so that's Tesla. Let's look at Meta. All right, so this is Meta, and Meta reported earnings last night. They did well. Earnings per share were up, revenue was up, but they guided lower, which can be a game changer, as we have seen with Tesla months or quarters ago. guiding lower. Now Meta is doing the same thing. They're really getting deep into AI, so they're spending a lot of money. So that's something to take into account. And couple that with it's a consumer-based company where people advertise, and if advertisers don't have the money or not making the money, then they're not spending money. So take that all in account. On a monthly chart, we're above the 9, we're above the 20, we're above the 50, and we're above the 90 simple moving average. That's on a monthly basis. Where last month, month of February, it had a high of $523.57, yet it closed out the month at $485.58. Something was in the mix. People knew Meta was going to have some challenges, and they were going to report a possible or guide down in the coming quarters. Meta reports yesterday. It's presently, it opened the month at $487.20. This is the month of April. Got as high as $531.49, and presently is trading at $438.19. On a monthly chart, it's above the 9. That's a positive one. It's at the top end of the upper Bollinger Band. It isn't crossed over, but it's right up there. And you can see it has followed that upper end of the Bollinger Band since October of 23. Got over its skis, and it majority of the time, 95% of the time, when a company or a stock closes above the upper Bollinger Band, it will come off it. So we could see, the 9-day right now is at $375.65. Your 90-day is at $224.49. And if you look at sort of that trend and then you look at the 50 month moving average, that puts you at $274.69. So on a monthly chart, where could this go? Where could the mean, if I'm looking at this from a Jim Simon's approach, the founder and king of mathematical algorithms at the Renaissance Fund, you know that everything eventually reverts back to the mean. Well, what's the mean here? The mean is pretty much the 20, which would put you at 274.62 today, or the 50, which is right around that same period. So if you're using a monthly chart, there's a lot of downside potential because you always have a reversion back to the mean, both from the top side back down to the mean, but also from the bottom side back to the mean. So be cautionary from a monthly standpoint. Let's look at a weekly chart, and we'll break out the MACD here. And as you can see here, this is a weekly chart, and the weekly chart is basically this week, it blew up because of their guidance, not their earnings, but their guidance on the call. And when these guys are telling you that they're going to spend a lot of money on development, it's going to crimp their cash flow, you got to pay it. You got to take that seriously. And to be buying into this, in my opinion, right now, that's a loser's game. You're going to lose money. And so I look at this and I go, well, it's 357 is the 50. Okay, if it closes the week below the 20, chances are it's going to go to the 50. Well, if I'm looking at remembering from a monthly standpoint, I'm more around this 200 week simple moving average of around $273. To me, if I'm a long-term, intermediate to long-term investors, define intermediate, 90 periods or more. So if you're a day trader or a day investor, you look at 90-day simple moving average. If you're a long-term investor, you're thinking on, like, I'm going to hold this for 3 years, then I'm looking at a monthly or a weekly or a monthly or weekly period of time. And as we can see here, that monthly chart that showed the 90-day right around the 275 mark, Go to the weekly, you look at the 200, and you got sort of the same matchup. So not a lot of discrepancy there, but pretty close. So take that into account. I'm looking at this from a weekly standpoint, a reversion to the mean on an intermediate to long-term basis. That's what I'm thinking. What is the mean? My MACD is rolling over. That's not instilling confidence right now in me that this is going to go higher. Your RSI is now downturning from April 1st, where it was at 74.9 to today, you're at 51.50. Once we break below 50, close below 50, to me, that is, there's not a lot of confidence in this stock price at this point in time. So it's best to be cautious. Let's look at the daily chart of Meta, and we'll break this down. Here, RSI on a daily is 29.62. That's a -1 on my 10-point scoring system. Let's close that up. Here, let's go to the MACD, and the MACD is negative. As you can see here, it is negative. It's going south. The histogram got big today. It's going south. Let's look at this. The upper Bollinger Band is pointing higher, and the lower Bollinger Band is pointing lower as well. But look at the stock price below the lower Bollinger Band. Now, is there hope? Sure. Because of the majority of the time, when a stock steps outside the lower or upper Bollinger Band, it reverts back into it. So from a hope standpoint, there's a good chance that this Bollinger Band, the stock price could jump above the Bollinger Band again and then go from there. But you have this 90-day simple moving average that is now resistance. It hit it this morning on the high. It is now, and granted, this is 9:40 Central Time. It is below that. A close above the 90 would be really, at some point, build a little confidence, because eventually this stock price is going to close within the Bollinger Bands. Does it mean it's going to go higher? Absolutely not. We've seen that game before. We've seen how it ends. But what you have here is this gap that was developed back on here on February 1st, which was the last earnings report, which was positive and encouraging, and it gapped up from a price of close on the 1st of February of $394.78 and closed the next day on the February 2nd of 24 at $474. This gap is being filled, and chances are it will be filled again. But once again, I'm looking at this on a daily chart. My 200 is just below the price of where it is today, and that is $372.30 is my 200. Resistance is my 90 right now. So I'm looking at this and I'm going, why would I take the risk of buying this stock right now? What is the payout? Now, if I'm Warren Buffett and I'm thinking out 100 years, well, maybe, it also could be non-existent, sort of like MySpace was, what Facebook did to MySpace back in the 90s or early 2000s. I think Rupert Murdoch bought MySpace for $500 million from these two guys. Where is MySpace now? I don't know. I don't hear about it. But was that a good purchase? Probably not. But a lot of things can happen, especially in this time and age where technology is rapidly changing. The consumer mindset is rapidly always changing. My daughter is an influencer. She makes an incredible living as an influencer, but as a social media manager, and she manages companies' TikTok and social media platforms, and she is constantly changing the game because the game is constantly changing. And so she's constantly changing up her strategy because the game is constantly changing. When you're investing in stocks that are consumer based, you have to take into account that the game is always changing. And because of technology and because of AI, this game is changing. Now, is Meta a player for the long run? What's the long run is you need to define. But today, I just sit on the sidelines and look for something better. I'd look for an asset or a stock or a company whose value stock-wise goes up in an inflationary environment. If you truly look at what inflation is today, based on how they used to calculate it, the real inflation back in the 70s, it's like 18%, okay? It's not this 4% inflation rate. You and I mean, hell, when they take out energy and housing, really, that's the biggest, that's where I'm spending a ton of money, right? Food, yeah. I mean, I'm spending more money on food today than I was a year ago, and so are you. So when you look at that, along with the cost of the devaluation of money, then you got yourself a bit of a humongous headwinds. And so I'm looking at Meta, and I'm looking at Tesla. And my overall feeling is, not now. Not now. They're led by two really forward thought thinkers, thought leaders. But right now, I'm not a fan of Tesla. I'm not a fan of Meta when it comes to owning their stock. And I think, you're seeing the marketplace tell you that as well. Don't ignore it. Use a process. We have, Mark has built the swing trading program within Best of US Investors on the Platinum channel, and he teaches you how to take the emotions out of this. I've taken his, in my 25 years of looking at markets from a technical analysis standpoint, and I've taken what he's taught me and his knowledge, brought it together with mine, and I'm looking at things from an intermediate to long-term perspective. And what all that is telling me, all that knowledge is telling me, I'd be best to sit in maybe a 1 month or 2 year US Treasury and pick up a 5% plus yield and wait for these companies to come down to where I think the market is, where their price should be, along with what the economy is telling me. We are now at a pivot point. That's what I'm looking for. I hope this has been helpful. Sign up for Best of US Investors Platinum channel, $60 a month. You get a whole lot of good stuff, along with 2 Zoom calls with Mark and I at 11:30 Central on Friday, along with Kerry's call on Friday at 3 p.m. It's a busy day on Friday, but it's well worth your time. Along with all of our different swing trading program, along with Kerry's bus vision of the future in the bus 12 and bus 13 stocks. And then I bring it around with the ETF tracker, which I'm actually building on and giving you more insight to what I just shared with you and how to score your companies that you're investing in. And so this is all for $60 a month. It's 3 guys along with the tribe members and their knowledge, because we have a diverse group of people. So you need to sign up for the Platinum channel, link below, and look for possibly a future, coupon or discount that'll last for a short period of time. But today, take advantage of this. Jump on board. All right. Have a great week, and we'll see you later. Peace. Live loud.